I want to talk about mortgage extensions and maturity dates. This is something that I've talked about in the past, but I'm going to continue to talk about because it is becoming more and more important. The maturity, as a private lender, the maturity date on your mortgage is not a guaranteed payback date. It is a representation of the terms ending and your money now being due and payable and your right to enforce action. The biggest mistake private lenders are making are spending or reinvesting those funds before a file is paid out. We are seeing cases where the borrower has a firm sale date on the property prior to the maturity date. The new buyer then can't close. The lender is now demanding funds that day. The borrower just can't come up with it. They can maybe try to refinance, they can find a new buyer or seller, but it could take 30, 60, 90 days before those funds come back. As a private lender, you have a responsibility to understand that you cannot commit your funds until they are returned. Now, if the maturity date hits, you have rights. You can force the sale, you can demand penalties and fees, and you can force the sale and demand penalties and fees. However, that still is going to take 30, 60, 90 days in a best case scenario before your funds come back.